I wonder, first of all, if we would just go around and introduce ourselves. Start
Yeah, sure.
with you, Vitaly.
My name is Vitaly. I work for CX.io. We're a crypto exchange. And one of the aspects of my day job, basically, is dealing with regulators, banks, and payment institutions in order to deliver the best customer experience on our platform.
Good morning, everyone. My name's Craig Patel. I'm the Managing Director of Transact Payments. We're an electronic money institution based here in Gibraltar and passported across the European Union, and we're trying to provide a solution that bridges the gap between the resistance from the financial institutions or the traditional players in support of companies like Vitaly's in terms of the challenges they're facing.
Guys, sorry, just very quickly, because we like surprises, we're adding a late member to the panel. We're very fortunate we have Richard Crook, who's Head of Emerging Technology at RBS at the event. We thought he'd be a very useful addition to the panel. Richard, welcome. Thank you.
That's really useful.
Good morning, I'm Kirza Salomon. I'm the president of Home Meal Replacement. We are issuing an ICO that is meal token, and this token will be used to buy and to pay our meals. And when you pay with tokens, you will get a real discount.
Hello, everyone. My name is Hui Gong. I currently based in London. I'm the consultant for a startup called Simis. Logo is this one. This is a decentralized payment solution for the cryptocurrency area. Thank you.
So Richard Crook, Royal Bank of Scotland. I head the emerging technology team, and one of the things we do is take a shrink wrap off emerging technologies, blockchain being one of them, and we've been, as you've seen in the press, in the space of doing payments, international payments with distributed ledgers for a while now, and so I was dragged out of the audience to come and join the panel. You see us trading in Gibraltar as NatWest International, for those of you who are locals.
Well, thank you for joining as well, Richard. It's going to be useful having your input, I think, on this so that we get a range of views on how the banking and payment systems currently work. I thought we should start with, actually, most people in this space know what the major pain points in the industry for DLT operators are. And also, not just DLT operators, but businesses involved in any way, quite frankly, with cryptocurrency. So I wonder if whoever wants to pick it up, but pick up what you think the main pain points are for you as a business. And that would be really useful, I think.
Yeah, sure. So, it's not a secret that the main challenge for the crypto-related businesses right now is basically banking. And it's not just banking, but rather big banks are starting to see some kind of competitiveness from the crypto space. And they basically try to push all the players on the market that rely on them in order to cut off any crypto-related payments. And the thing is, here, my opinion is we'll still see, in the near 3 to 5 years, very tight connection between crypto and fiat. And in order to operate properly, we need to, as the regulatory bodies are the same basically bodies that regulate or tend to regulate crypto businesses and traditional finance. I think we need to work closely with the regulating bodies in order to pressure these traditional financial institutions in order to have a proper payments instruments. I see a lot projects trying to solve this. Crypto holders spending their money online in traditional retail, companies like Wirex, token cards. Yesterday we had a pitch with one of them. There are a lot of companies like that, and most of them say MasterCard and Visa are very reliable partners of ours. But in reality, what we see on CEX, and we actually deal with credit and debit cards transactions, what we see in reality is basically MasterCard and Visa as the biggest payment operators out there. They're every single day, every single month, they are coming up with some additional restrictions for crypto industries. So I think my opinion here is 2018 should not just be, we talked a lot about it yesterday, it shouldn't be just like a year for the regulating crypto, rather than crypto companies working with the regulatory bodies in terms of pressuring traditional finance in order to work with us.
Thank you.
So from my perspective, I think that the division between traditional payment operators and the DLT sector or the blockchain sector is getting wider, heavily driven by lack of understanding, perceived risk, lack of investment in trying to work with the industry and the sector to build controls. I come from the electronic payment sector. I've been in the e-money sector since 2001. I remember in 2001, we were the bad boys on the block when it came to provision of financial services. We were disrupting the banking sector. We were taking certain elements of the business that the banks didn't want to do. We're a B2B operator, right? Our job is to find solutions for businesses to help service their customer base. This division, whenever there are problems between sectors that heavily rely on each other, and this movement of traditional fiat value into the digital virtual space, has to work by way of partnership, but partnership built through understanding. And right now, I don't think the understanding's there, and I don't think the will to understand it is there. It's created opportunity for electronic money institutions, but we're under a lot of pressure as well, because we have a traditional business that's established, is trusted, works really well. We've never had any breaches. We've never had any issues in the way we operate. Our services are built around 3 key arrangements: making sure every penny is accounted for, the boring financial bit, making sure everything is compliant and abides by all the regulations. We've been doing that for years and years and years. We've seen so many iterations of change over the last 18 months, which is really designed around creating competition in the payment and banking space, right? So this is allowing fintechs in, but it's also allowing DLT operators in. And we've had to run alongside the introduction of the regulatory frameworks, because we're a regulated business and we think we can help support providing some of that infrastructure and confidence for the traditional payment operators out there who lack that understanding by using ourselves as a trust layer. But it's incredibly challenging, right? And I'm not going to lie and say that it's an easy job, because we're putting all the investment in, the time, the energy, funneling opportunities, clearing out the good between the bad as we see it, based on our own risk, working with several partners in the chain to make sure we're not duplicating effort. But it's a significant investment and it's incredibly challenging. And trying to get the regulators on a broader scale, say we operate in the European Union, so at an EU level, there have been policies brought in around the Second Payment Services Directive, Secure Customer Authentication, the 5th Anti-Money Laundering Directive is actually being refreshed to pick up this sector as well. They're all good signs to try and make it work from a regulatory level, but you can't expect the regulators to fix everything. I think it's got to be the financial services sector's got to show a commitment to want to work with this area.
If you don't have any other comments, I think if you don't mind, Richard, I wouldn't mind throwing it to you. Do you think there's an argument to say that banking, the plumbing of banking, is really a utility nowadays? And the problem we've got is that, and I'm going to be sympathetic on the one hand to banks, but also explore it. The problem we have is that take the settlement system, because most of this breaks down at the settlement and clearing systems, doesn't it? And people don't understand that. You can find a bank, they can be supportive of fintech, they can do a risk-based view of your business, they can look at your policies and procedures, but if they don't settle and clear the underlying currency, and they rely on another bank to do it, it doesn't matter what they think, it doesn't matter what policies they have, does it? It matters what the underlying bank says. And that's the real problem. We know the Bank of England is looking at changing the RTGS system. They want to open it up to fintech operators. I think that's a really good thing. In fact, Mark Carney, he's talking about opening it to fintech, but what he's really doing, I think, is trying to de-risk it from the concentration we've got in major banks, and I think that's not a contentious point. But whilst we're stuck with this old system, which has a number of gatekeepers that control everything, isn't there a point to say that actually it's a utility? You should have a right to at least have good reasons to be refused the service. And the reason I say that, for example, is we have clients that are not doing anything unlawful, that have KYC and AML policies, that have staff, and they can't get a bank account in the UK at all, anywhere. So how do they pay their taxes? You know, how do they meet their pension obligations? How do they do VAT? Just try and do any of that stuff in the modern world without a bank account. But there isn't, at the moment, a right to a bank account. So I'm just wondering if you want to come back on that.
And if we look at those two parts that were being brought out in the commentary from the others, there's two aspects and two questions here. One is education, and the gap that you gentlemen are suggesting is increasingly growing between what you call the crypto space and the classical banking space. And I think, you know, myself being on stage today gives you an example of actually we're not falling apart. There's no gap. There is a medium or short-term pain, and we can cover that education piece. I think the other side of this is two challenging aspects of that utility, if you want to call it that, that is around the clearing and settlement space. Royal Bank of Scotland serves its customers, first and foremost. That is its purpose. And when you get on the ground and you talk to the relationship managers, they are doing anything they possibly can to serve those customers. And they themselves struggle to assist those customers when it is the banks that are used to provide the gatekeeper against anti-money laundering, any kind of financial crime, or the funding of terrorism. And it is upon those entries into that utility, or the gateways into those cities, that are required to ensure that the money being used has not been drawn from criminality, financial crime, terrorism, anything else. And the fines are nearly limitless. And Royal Bank of Scotland has taken its own share of those fines. Last April we got fined when we found one of our customers was using our services and our utilities and those payment services to move money through the Russian laundromat case. It's a really good example of how our customers and clients can unwittingly and there's a lot of unwittingly activity in there, or maliciously use our services for purposes of crime or capital evasion. And when you get into that situation and you're the one who's going to pick up the fine, actually we then got to start talking to the customer about, if you are doing an activity that is high risk, if you get regulated, you can pay the fine. And that would be really useful for us. And the best example of that is Ripple back in 2015, where they got themselves regulated. We were very pleased to see them being regulated. And they then got fined. Welcome to the club. Okay, and they got fined for not doing their anti-money laundering. What was important is the underlying banks didn't get fined.
Yeah.
And this is about sharing the responsibility of being a financial institution. If you are a financial institution, come and join the club, get yourself a license. You can get fined just like the rest of us. And that is actually how that system works. So on one side, the regulation piece is important. I think on the other side, and the education piece is I think you're pulling out a really good point here. There is a knee-jerk reaction, and you're seeing that, and that's why you're talking about a gap creating. As the cryptocurrencies and the crypto space becomes mainstream, the risk rises tremendously. And before CryptoKitties hit Ethereum and took 20% of the computing power, as the last panel pointed out, before that, 2/3 of Ethereum trades, or the activity on Ethereum, was part of an anonymous engine. Looks like a big Enigma machine from the kind of Second World War. They're basically making sure that no one knows where these transactions came from or where they're going. That looks dubious. That looks like layering from a money laundering perspective. It does not make it easy for someone like myself who's trying to bring distributed ledger technologies or even cryptocurrencies into a mainstream bank when we've got that kind of activity going on. Silk Road still sits there in the memory. And that is why actually the gap widens as a knee-jerk reaction, because you've got so many people coming into this space. And we as a bank are required to protect our customers. That usually gets dressed up as we're being anti-competitive, but actually we are required to by our regulation. As I say, go and get yourselves regulated, join the club, and you'll then have that responsibility too, and then you can take it from there.
Sorry, go ahead, Craig.
Can I just make a quick comment on that? So we are a regulated business. We aren't working directly with any company right at the moment. We're working out the solution chain. So we're taking that approach in the right steps that need to be done. But I will also say, as a traditional electronic money business, that is regulated. That has been part of a consultation piece through advisory boards with the PSR, and the creation of the PSR was specifically to try and drive this competition and remove the statement of risk appetite being the decline factor. There's a justification. Every financial institution now has to kind of provide some transparency around that. It hasn't significantly changed over the last, 2.5, 3 years. And so I'm just saying, look, the evidence is out there, and I feel for you. You're an incredibly brave man coming up on this panel, so I applaud you for that. But for me, we witness the same challenges. We're a regulated business, and at the same time, when we say no, you can't do this or you can't do that, or it has to work in a certain way for us from our own risk appetite point of view, that falls negatively with this sector today as well. But I think the more we understand and are prepared to invest time in understanding each other's businesses, the better chance we've got of coming out with a much cleaner model that works. And the supply chain becomes a lot more trustworthy, controllable. I mean, I'd happily be audited every month to be able to prove that. I'm sure you'd be happy to go, I'll pay for an auditor to come and sit in my office and check whatever the bank wants to check to be able to validate this, right?
Can I just add to that also? We actually see a lot of kind of steps forward, the crypto businesses from guys like payment companies. But again, when it comes to bank where they have to settle, then nevertheless, we actually pass independent audit every single year because we are registered with FinCEN in the US. And we have bank level KYC and AML procedures in our place, and we actually acquired the team from one of the largest banks to build all this software in place. So some of the meetings with the banks end up with like, no, we can't get an account for you, but we'll actually be glad to outsource our KYC and AML processes to you. So I'm just saying that it's not just the KYC and AML. It seems there's something else that banks are looking for, actually.
Yeah, I want to say something. First, I agree with you, we need to be regulated, we need to apply the license, join the club. But the issue in China now, because I think 5 years ago, the central bank issued a payment license in China. But after they issued, until I think total number is 261 payment license, they stopped issue any payment license in China. So any startups want to be regulated, because the regulated is another way to protect the business as well, but they cannot find a way. I think 2 years ago, one payment license in China is worth 600 million Chinese renminbi yuan. It's very expensive for Chinese startup who want to deal with fiat money payment solution. So I think now you can find a lot of cryptocurrency wallet startups in China. I think this is another way for them to run the business, because they cannot still to join the club anymore. So that's why they also want to focus on the UK area, the European area, the US area. But nowadays, I think it will take time for the Chinese company to go abroad as well. So first, I agree with you. We need to apply license. We need to join the club. We're definitely willing to do that. But at the same time, we also find some risk when we deal with cryptocurrency payment, because since middle of last year, actually, my company in London, we start an area of business. We only accept cryptocurrency. But we met some problem. The real case is sometimes the clients want to fix the fiat currency rate. Sometimes the currency will fix the cryptocurrency risk. That is also a risk, the potential risk the payment company we're dealing with, because some clients only want to pay by fiat, but the problem is if they pay fiat via the bank, it will take time. So if you want to buy something immediately, you need to find another way, like you pay by Bitcoin or Ethereum. Some people, because they join this area, the cryptocurrency area, very early, so maybe they have a lot of Bitcoin or Ethereum, so they are more willing to fix the rate of cryptocurrency. But nowadays the cryptocurrency market is very volatile. So I think in the future, if the payment company will be regulated, but also they will face a lot of risk.
So you're just look at what you're seeing here. You're seeing a good, maturing, emerging market where people are looking and putting their hands up to be regulated. And what we are seeing is the emergence of, and I look across this list, emergence of institutions that are actually starting out with setting themselves up correctly with the right regulation and the right institutional. So I'm looking across here, so someone like NKB is a good example of start with the regulation you're going to have later on. If you look at it from our perspective, we get a lot of bad press in terms of, well, they won't do it, they won't bank it. Gareth is here locally from NatWest International, and he will not thank me for saying this, but keep asking. Keep knocking on his door and keep asking, because the bank is here to serve the customers, and if you as the customers want those services, keep asking for them. Funny enough, at some point, someone's going to say yes. They're going to work out.
But it might be 3 years down the line, Richard. In the meantime, people... Well, I mean, to be fair to your point, obviously the biggest issue we've got is that the banks have a massive disincentive, as you said, to support some areas of business because of worry about fines and losing licenses. And actually, they don't have a big enough incentive, do they? That's a big issue as well in the DLT space.
So let's throw that one around the other way. Just on the education piece, SWIFT, which is the incumbent network that we use for making payments, went live in 1971. There isn't a single person working in the payments utility functions across the financial service industry that remembers what it was like pre-SWIFT. So going down into those functions and saying, we've got this new way of making payments, is a social problem, not a technical or an economic one. It is simply, I don't understand. When are we going to send the payment over SWIFT? We're not. We're going to use Ripple. We're going to use Ethereum. Those are social problems where we've got to educate people about how to use this. You look at the way we brought 5 banks together in Ireland, in Dublin, and built them a distributed clearing settlement mechanism as a way of using the underlying technologies to show actually you can make a much better payment system. 95% of Irish payments leave Ireland, go to Belgium, then return. They can take 2 to 3 days. Actually, with a distributed clearing house, clearing settlement house, they've now got a real-time engine. That is where the power of the technology is improving the customer experience and also getting rid of cost. And that's not 3 years out, that's 2 years ago.
But there are solutions, if you don't mind me saying, in a sense, for the banks. What we're talking about is that there's a sector here that literally can't get support, and it's not based on any review of their risk. This is all policy. And to take your point, I've got licensed payment service provider clients that can't get bank accounts. So it's not there isn't one club, there are many clubs. And getting a financial services license, in my view, if you don't mind me saying, is just one part. But it doesn't get you through it gets you maybe to knock on the door, but it doesn't give you necessarily the ability to settle and clear transactions that you want to. And I don't know if you think that's a fair comment, but it's not an attack on the major banks, but it's there. And it needs to be, it needs to be dealt with if this sector is going to genuinely be able to evolve and converge with the, the existing fiat systems.
I think that the problem is that we say that cryptocurrency is mainstream, but it's mainstream. It's not real mainstream. To be a mean of payment is not like this, and we are setting up. tokenomics, that one of part of our tokenomics will be a payment. And the major challenge there is the education, and the education of our customer, because we need to, the adoption of our customer of the cryptocurrency as payment for a meal, for a salad, for a coffee, and to educate that, and the time that it takes to educate the challenge. And our marketing has worked a lot on thinking about that. And the major problem were the volatility. The volatility for a consumer to take a coffee is difficult. And we arranged tokenomics, special tokenomics, to avoid the volatility to consumer. But I think that the education and the adoption of the real of the cryptocurrency as a payment needs a lot of work. Not only. And when that is done, the banks will hurry up because they will lose the market. And I think the banks, when they see success on the market and cryptocurrency as a real payment in the real life, they will open the doors quickly, because if not, they will lose all.
I think that's the
market.
incentive point, isn't it? They need to have an incentive to make that jump, and it's a fair point. There are businesses.
Yeah, and what you were actually talking about is we need to draw a clear line here. So the banks are quite optimistic regarding the blockchain technology itself, but when it comes to crypto, the banks are fine with using blockchain. They are fine with experimenting with blockchain, using the blockchain in like private blockchains in their services, trying Ripple as an alternative to Swift, and Stellar, there are a number of others. But when it comes to working with crypto merchants, then where the problem appears, basically.
It's more the corporate banking side or the transactional banking side for your business to operate in order for you to service your customers, right? That's where the gap is.
Yeah.
We've worked with NatWest International for 10 years, right? We've had a fantastic relationship with you guys for our traditional business, and it works perfectly. But we now work with 10 different banking partners. We have agency sponsorship in the UK to be able to do our own faster payments and issue our own account numbers. But I can't service this sector because my sponsor bank hasn't an appetite for this sector. So, you know, it's almost like, well, I have my traditional business, and I'm trying to find a solution for the non-traditional business, and it's incredibly difficult, but I understand why. I really do. And in fairness, I think what will happen is it's going to take one brave, large bank to want to look at servicing this market, and once that happens, it starts becoming more of a commercial attractive decision to try and compete with that. And I hope it's you guys, you know, but we don't know, right? I suppose we just don't know where that's coming from. Or the sector's going to have to get together in a cooperative to try and create its own infrastructure for this. And that's going to be challenging, because that's going to require a jurisdiction that's supportive of licensing somebody that's directly coming under a banking license from a community that right now is, you know, seriously underserved.
Yeah, I see. On that last point, I think you know, there is hope that one of the major banks, and you need multiple. You need one that clears dollars, one that does sterling. But there's hope that the banks have enough of an incentive to not to want to miss out on the market. But I don't think you want to build a business model on hope. And I think it seems to me that if you look at how Visa and MasterCard started, you know, this was banks getting together and saying, let's coordinate to do something together in the credit card space originally. I think we're at that point now with fintech. My view is that fintech companies literally can't have 3 or 4 years of knocking on banks' doors and hoping. I don't think, and getting a license and finding, actually there's another door. You know, you've got your financial services license, but welcome to the system. You're now going to need to knock on this door, because that you don't have a right to a bank account necessarily. Or even if you do, you don't for this customer or this sector. So I think the sector needs to really consider, could we coordinate to do something so that the banks have a real incentive to take us seriously? Because until then, I think it's going to be a really difficult 2-3 years as fiat and crypto run in parallel. And I don't know what your thoughts are on that.
Well, yeah, you're absolutely true, and we are nevertheless, I'm kind of very candid on this. We are very optimistic regarding the banking crypto relationships in 2018. I've said from the stage yesterday then there are actually several cases already on the market, like Lloyd's approved Revolut to have crypto on the platform. Then ING confirmed that they have opened the bank account for Bitfinex, and there are cases in Europe specifically that are starting to happen. And regarding like of the being attractive commercially, trust me, like all the crypto businesses are very attractive commercially. So you basically need to pick the right ones that have this, whether self-regulation or starting with the jurisdiction, or like Gibraltar have some kind of the regulation in place. So yeah, answering the question, I think we'll see a lot of steps towards one another, crypto and traditional banking.
Do you want us to see if there's some questions? If any, unless, should we do a couple of questions?
Yes, hi. I come from the money transfer industry, and we've been dealing with de-risking for quite some time now. Very, very hard. We've been doing education. We've been doing everything we can. We've been regulated for a long time. And I mean, what's happening now is we're taking the banks to court. And we've been successful. I mean, we've been successful in Spain with the European Commission intervening and stopping banks from closing accounts. We were very successful in Chile with anti-competitive ruling, and Philippines. So it's not the solution. I don't. It's not the solution, but it's getting to that point now. A good thing is that regulators are in our side for the first time, and they're telling the banks, but they can't force banks to open accounts. But the regulators and the World Bank and some of these multilateral agencies are indeed helping and interested in finding solutions. So I just wanted to add that because it's just from a point of view where I come from, which we've been dealing with this and forcing a lot of companies to close down, you know?
Yeah. Thank you.
It's a really good point. But a lawsuit is an instant breakdown in the relationship, and that's not what you want, right? But it's a really good point, and I think that there is probably another step change from a regulatory body point of view, which is to try and bring the two parties together. The examples you mentioned, I don't understand why those institutions are not sharing the information about what gets them comfortable about servicing those specific companies. Because if they did that, that goes back to my point about the education piece, right? Because I know if I ask the question, everybody in this sector is prepared to be pretty open, right? And be open and honest about some of the weaknesses and the failures that have taken place, right? But no business is ever not going to make mistakes and correct them. It's how big those mistakes are. And I just think, you know, if traditional financial institutions were open to wanting to share that, it's non-competitive in my mind. This is all about trying to fix the problem, right? And rather than it happen concurrently or in isolation from what is tried and tested, I don't think is the right approach.
Well, going back to the utility point really quickly, the reason why I mentioned that is actually it gives banks cover. What banks need is some cover to say, if we are a utility, so under the Payment Services Directive, the second one, there is some right there for PSPs to have, banks have to, credit institutions have to have good grounds, reasonable grounds to refuse banking services. I think once you start to get that in place, actually the banks can start to relax a bit more because they can say, we're not going to be responsible for everything that goes through our gateway. And I actually think that would make a big difference. So, you know, sympathetic to the bank on that.
So Pete, let me make a statement as well. So we've supported really, I guess, what became the fintech industry, but before fintech became a word, right? Or a term. 6 companies at least that I can think of off the top of my head have been acquired by banks, traditional banks. And so it was, you know, when we first started to support these companies, it was like, we don't want to touch this. This is not where we want to go. This tech, and this is traditional coded stuff, right? Nothing. It was just, you know, finding solutions to consumer problems. That's what they were doing. And we were just a facilitator to that under our regulated permissions. And it's great to see these companies go through incubators that are set up and invested by a lot of the big banks. And those acceleration programs have also allowed them to achieve funding from traditional banking operators. And then the acquisition piece is just brilliant, because that's a perfect completion of that story that says, yes, there was a good use case there. There was the best way for us to support this was to bring this into our group, to offer it to a wider customer base. And I love that, and I would love to see more of that happen on a broader scale, right? Fintech now, traditional fintech companies, it's funny me saying that, but traditional fintech companies have been recognized as something that is established and is a key area of interest in the financial services market. But for some reason, cryptocurrency, DLT, and blockchain solutions are still sitting there as like the dangerous part of the But I hope that the same thing will happen.
Undoubtedly, that's exactly what we will see, is that natural progression of emergence of a large number of startups, some of which we partner with. The relationships will grow, as yours has, and then actually some of them will get acquired, as we then recognise that actually that is banking, and we like that inside the house, not just as a partner.
Thank you, everyone.
Yeah, fascinating stuff. Thank you very much, Richard. Thank you for stepping in at the last minute, giving a different perspective on everything. Thank you very much.